Howdy ho, everyone, and welcome aboard. Thank you, Marlon. Thank you for being our trading buddies this Monday, the 26th of September. My goodness me, not too many days left in the month, and I don't know where they go, guys. Really don't. Righto, I've got a weird-looking screen in front of me. Let's see if I can fix that up and get straight into it, shall we? Looking at pound versus the US dollar. That's not the pound versus the US dollar, I must admit. That is, and I have isolated the range that we're looking to break today, and it is the high, or the high is 1.0846, and the low is a massive 528 pips below it at 10318, 1.0318. That makes the midpoint 1.05820. For those of you who don't know what I'm doing, please say that in a chat box somewhere, because I will go through this if need be. If not, if everyone knows where we're up to, then happy days. What we're trying to do is get 2.5 times our money, and I don't know that we've tried to do that on a range such as this one. This is a pretty big sucker. We're nowhere near the midpoint, so I'm okay with that. And we will go short in a couple of minutes if indeed that remains the case. Sorry, guys, I'm just going to get YouTube functioning there. There we go. All right, so we will place an entry short at 1.0582. I might as well set that up on the trade manager. If you haven't got a trade manager, then obviously you'll need to stay in front of your charts while this is happening. Oh, I won't let close. There we go. Now, once again, as always, this disclaimer is very much about a non-proven system of trading. And if you are considering trading this, then you need very much to be aware that it is an unproven system and needs to be respected in your risk. So I'm risking 0.05 of one lot, which is very, very little. And I would suggest that you do the same, because the chances of this not working are pretty much as they are of it working. So far, so good. We had a good one on Thursday. I think it was Thursday. There was a good one. No trade on Friday, as the market just tanked. And thus far today, it looks like we will be entering short. So I'll put those parameters in there. Entry will be, of course, at the midpoint, which is 10582. And the stop loss will be at this level, 10846. So our target's going to be massive here today, given we've got a very big range. TP1, obviously, we will take at the low of the range, which is 10318. So I can put that in. 1.0318, and at that point we will close nothing, but we'll move our stop loss to entry. Stop loss to entry, it's a nightmare at the moment for me. Stop loss to entry cost me a lot of money last week on the N pairs. Okay, so there we have it. The order is ready to go. We will press the sell button. Actually, before we do that, we'll disable TP2. It is. Okay, so we will sell at the midpoint. Stop loss there. And TP1 there. As I said, at TP1, we won't take any profit. We'll simply move our stops to entry. All right, I suspect that's going to take some time to develop. Now, I'll give you a target, if we're fortunate enough to have one, or to get near one. 2.5 times the risk. Now, the risk is 200 and 264. 264 times 2.5 is 528 plus 132 will be 660. 660. I think that's right. If it's not, someone will correct me. So 660 from there is going to be $0.9921. Really? 0.99. That doesn't make sense even. Okay. 105.82, 103.18. It's 264 times 2 is 528 plus 132. 528 plus 132 is 662. Or 660, sorry, which is right. Entry there. 660 from there. Come on, you can do it. Is 0.99. Let's call it 20. 0.9920 is our target. So I could have just put the pips in there, couldn't I? 528. What did I say? 660. All right. Target 660. That's their stop loss, 660. Oh, I've stuffed this up completely, haven't I? I'll put that in the wrong place. Stop loss. Don't want that. That was 264, right? I think. Target is 660. It's Monday, guys. There we go. Now we're right. Happy days. I think happy days. All right, so let's move from there. I don't see any questions in the chat box. That's primarily because I haven't got the chat box open, but there are none. Public holiday next Monday and daylight savings 6 p.m. from Gary. Public holiday in Australia and daylight saving. Okay, here we go again, Gary, right? Yes, here we go again. So we've got to, this Aussies, we've got to change our times. We'll be going to what 5:55 p.m. We'll be trading buddies only for Aussies, or if you're in the Southern Hemisphere. Oh no, I don't know if New Zealand, don't know what they're doing. Anyway, we'll see. But that's next Monday, as of next Monday, after the Rugby League Grand Final. Oh my Godfathers! What about the AFL Grand Final? What a tragedy! If you're a Sydney Swans follower, woof, spew bucket. Righto, that's the pound versus the US dollar. I'm going to go through the weekly game changer bars, which are few. And I can't see a thing here. Why? That's weird. Okay, well, I know what they are. I'll show them to you. Aussie CAD, Eurocad, Pound CAD, and Pound Kiwi. Aussie CAD, or an Aussie CAD chart. I don't think I do. All right, we can fix that. Something's wrong with my market scanner for some reason. And I don't know how to fix it. I'm having a good start to the day or to the weekend. Aussie CAD. There we go. We need a chart. We need a template. Righto, weekly chart is suggesting that we go short Aussie CAD. And I've got no idea what happened this morning, but there's been an incredible start to the week, in particular the Euro Aussie, which I am trading. You guys won't know that. And it's had an absolute shocking start to the week. Got pummeled. And I don't know what happened. We'll go and have a look at that in a bit. But Aussie CAD suggesting that we do go short. Oh no, intrinsically I'm okay with that. Trade-wise, do I really want to go short here with that scenario? Also got the hint of a little double bottom here and a higher low. So I just don't know that I want to, or I'm prepared yet to go short Aussie CAD. Untested monthly pivot. We've got about, what, four days left in the month. Pivots above us. This is more of a buy zone here right now than it is a sell zone. So no from me. But if I get an opportunity later in the, well, maybe tomorrow, maybe Wednesday, off a smaller time frame, as maybe a false break of resistance, then I'll follow the directional bias. I get that bit, but right now it's a no from me. Eurocad is next. Oh, I've got a Eurocad chart. Yes, I do. Okay, this is crazy. I have no idea what happened today. I placed an order this morning on Euro Aussie short, and when I came back to the charts not long ago, I saw this incredible candle. And that is it on the Eurocad. Now, I'm a bit okay with that because I've got a short bias. The weekly candle's telling me to go short. The problem with that would have been trading straight into the monthly pivot. And as it turns out, had I placed that order, I probably would have got a TP1 very, very quickly. As I said, I've got no idea what happened to the market this morning, but it went haywire for a little bit. Am I still of that opinion? I think the answer is yes. Directionally, I'm okay with it. But again, it's very clear to me that we've got a false break set up here, and I'd love to see price get back up to here. The problem I'm going to have, of course, if this candle is the one that comes back and tests that area, this area, I can't put my entry here. That candle's just too big. And again, I'd like to know what caused that. That would be good. Well, so this candle needs to stay where it is pretty much, and then maybe tomorrow we get a retest of weekly pivot trade line. Then I can look to trade this short, but certainly gone with that candle that we've been dished up earlier today. Pound CAD is next. I don't think I have a pound CAD chart. No, I don't, but we can fix that. Pound versus the Canadian dollar. Bring that across. Same, but no idea what's happened here earlier today. Ash might be able to help me in the tick, but the market's just gone haywire, and it makes it untradeable, completely untradeable here. The weekly chart is suggesting that we go short, which was already untradeable because of the size of the candle and the position that we're at, completely oversold. And this candle just adds to the mire. Maybe it's now telling us that there's a long to be had somewhere, but it's certainly not off this candle on the daily chart. Might have a look at the smaller time frames a little bit later, but from a daily perspective, this is just not working at all. Neither's the next one, which is pound Kiwi. Let's see if that bounced around like the rest did. Yes, it did. Wow, what happened? What happened? Interestingly, gapped down this morning and went like a lead or lead sinker, really, to the bottom of the ocean. But then it's come bouncing back off the bottom there, and what happens next, I don't know. Again, I'd like to know what's caused this move. Very, very interesting. So absolutely no trades to be had, despite the fact that the weekly chart is telling us to go short. Again, we're going straight into a support level, makes it very, very difficult, and that would be a no from me. My watch list is consisting of 4 pairs. Aussie yen is one. Now, Aussie yen, these are all going to be similar, guys, because they're all preying on false break, P-R-E-Y-I-N-G, not P-R-A-Y-I-N-G, and really looking for a buying bar here today. And if that was the case on Aussie yen, I would place an order underneath here tomorrow morning. Now, a little caveat to that would be we've got a support level dead ahead, and I would need to have profit in the bank before we hit that level. So looking for a small bar here. Maybe the one that we've got is cool, but I'd like to have a green body. Green body under there, stop loss here. Untested weekly pivot's a bit of an issue, but I'm not concerned about that too much just yet. That's Aussie yen. The second is CAD yen. And I do have a CAD yen chart here. It's exactly the same scenario. You could even have traded that bar there if you so chose, given that it is a game changer plus bar. What's a game changer plus bar? Key reversal bar followed by an inside bar. So you could put an entry there. You could put your stop loss probably up here. Makes your reward to risk very, very poor, however, on CAD yen. I guess you've got to weigh up the yen. Now, the yen has rallied pretty much on the back of the BOJ intervention that happened on Friday unexpectedly. And unexpectedly because they just had a BOJ meeting, right, where they pretty much left things as they were. But then they came out and intervened and bought some yen, getting rid of a few US dollars, which is why obviously we saw the yen rally, certainly against the dollar, but against everything else as well. The question I have to ask myself is that sustainable? And the answer I come up with historically is always going to be probably not. And whenever the BOJ have intervened in the past, I won't say whenever, often when the BOJ have intervened in the past, I have seen, yes, a gut reaction, but I haven't really seen too much follow through to that. Maybe that's what we're seeing today, or maybe that's what we'll see into the week. Question mark. You know, I'm not calling that, but I'll see what price action brings me. But certainly, if this is a test of that trade line, then tomorrow I will put an order underneath here, but I'll have to take some profit before the monthly pivot. That's CAD yen. Now, Euro Aussie was my trade, and as I said, I placed the trade this morning, and I woke up. When I woke up and I'd already done my analysis yesterday, and was looking for a take profit down here somewhere. Can't remember where. I didn't even know it had triggered when I came back to the charts not long ago, and not only had it triggered, it's given me a complete reversal. So not happy with that one. And I, again, have no idea what's happened this morning. There's nothing scheduled that I'm aware of. Something's come out of the blue. And again, I'll defer that to Ash in a minute. And the only other one is Eurocad. Now, Eurocad, you'll probably be aware, most of you. I don't know why that's like it is, but anyway, let's pull it up. Eurocad, I don't have the chart, do I? No. Been a massive bear on this pair for quite some time and profited quite well out of it for some time. Don't know why I got out of it, frankly. But it's suffered the same fate this morning as the rest. Weekly chart is suggesting that we go short, and I could not possibly be in more agreement with that, except to say that everything is oversold or overbought at the moment. And it really is a case of watch the US dollar, I think, because I think this market is getting to the point where not likely to reverse, not even maybe going to reverse. It has to. There's no choice. It has to. And, well, at least retrace. I won't say reverse. But deep retracement is due. Whether it happens today, whether it happens this week, I couldn't tell you. But the dollar, if you have a look at the dollar, it's just on fire. And it looks like this was responsible for the move today, whatever that was and why ever it was, I don't know. But if you have a look at the monthly chart, all I can see here is blue sky until we get up to 119. It appears that we're through this level. If you go to the weekly, we've closed pretty much bang on it, which is interesting. It may indeed be the point of turn for a brief period of time at least, but the monthly chart's telling me that level there, which is 113-ish, may hold this market up. Look at it. It's just like a skyrocket. Unbelievable. As I said in trading, but not trading buddies, what's that show called? Market update yesterday. The Americans are having trouble getting that mission to the moon off the ground, but they're having absolutely no trouble getting the US dollar skyward, and there it remains. Is this the turning point? Is this the resistance level? Question mark, question mark. I don't know, but I do know that at some stage this has to cool off, and maybe this week is that. If that's the case, you may see the euro strengthen a little bit. maybe there's a break and retest on Eurocad that I'm kind of dismissing, rather than saying, okay, we've got a bearish game changer bar, so let's go short. Maybe that might work in the opposite direction. I'll keep my eye on it. I'm not committed to the short yet, but if I see a lower high, certainly on the daily charts, probably in this vicinity, it just looks to make sense, doesn't it? That this is a false break of not only the trade line that I've got coming through here, which is very flat, I've got to say. There it is. It's the same as pretty much everything I've outlined. The Aussie yen, the CAD yen are the same. We need to have that retest, and if we do, dismiss this candle, which if you can, and trade it short. That's what I'll be looking to do. But if it gets above there, then look out. This could go long. Interesting. Righto, mate. That's pretty much me right now. How are you doing?
Yeah, very well, mate. Very well. I'm kind of ready for this market, but it's not ready for me. So I've just got to wait out and see what transpires. I agree.
Well, you were sleeping at the time. What the hell happened this morning?
I'm not entirely sure. I mean, the kind of headlines are pointing towards the pound, and it might just be a knee-jerk reaction pretty much as the market opens up, because we did see a pretty extreme downdraft on Friday, and it could just be, just a bit of panic kind of coming in, because as you'll also notice, a lot of those positions have reversed. So I wonder whether sort of like, things now have calmed down with the UK market opening up. And oftentimes Monday will provide an opportunity to go in the opposite direction of the Friday move, if the Friday move's extreme. But so far, we haven't seen huge evidence of that. I'll show you my chart, because I'm quite keen to go long on the FTSE, and I'll show you why. And that would bring us into a lot of other charts, and I'll try and make this no more than 5-10 minutes, just so George can give us his opinion. But if we look at the FTSE here now on the weekly, we've got a little area of support, and it starts back here. And if we come in here, I'm using this closing low here because it coincides with this this little test here. So I've got my 3 touches, and then if we kind of bring it in, just tighten it up a little bit, bring it into this point here where that closing low is, then we can see that we're sitting on that level. So we're sitting on a level of potential support here. What we need to see now, that there's some buying coming in. There's no question there's some buying coming in down at these levels. As you can see, we got a higher low here on the hourly. If we draw some lines, then what we really need, obviously, this area could get tested. Not exactly sure where that'll be. If we go down to the 15 kind of states that it's got to get through here, and we should probably tighten that up now. It's got to get through here where the daily pivot is, just to give us some price action back to the weekly pivot, which will probably eventually coincide with this trend line, depending on what time of day it happens. So I'm quite keen on a long in the FTSE, but not until it gets kind of out of these levels here. So if it breaks through, then I will take a long, and maybe I'll take something off the table and leave something on an occasion like this, because it has been so aggressively sold off. The kind, back to the, oftentimes what happens on Friday is reversed on the Monday. It doesn't look like that's going to happen today. What could happen is just a little bit of buying, but then a resumption of the selling, because there's very little which would suggest that we are about to turn. This is all about FTSE weekly may likely be a 200 EMA bounce. Okay, well, we'll bring that in as well. So we if we have a look at the technicals first, then it kind of gives us an area that may well, is that right? No, it may give us an area that may well provide what look like opportunities. However, if we don't take into account what's going on with the fundamentals, then we could be getting into trades that we really shouldn't by right be in. Yeah, like it, Sweet. Really like it. Look how many times this bounces here. Beautiful. But bounce there, bounce there, bounce there, bounce there. So what Sweet's saying is that this area is proving to be strong, and I would completely agree with that. I don't use the 200 period moving average, so I might add that to the chart, because you can see how successful it has been, the weekly 200 period
Certainly
moving average.
respects it, yes.
Really cool. So yeah, loving that. And I mean, even here you could argue that it did respect it and respected it, and it only when it went through. Actually looks like a very good line. Look at that. Really good. So in addition, this is why we do trading buddies, right? In addition
That's
to
right.
to the charts has to now be this 200 period moving average. On the weekly, I'll have to check it on the dailies, but on the weekly it looks very good. So a potential bounce off here, but as I say, we've got to kind of respect the fundamentals, and the fundamentals at this stage don't point to a rally in the FTSE, and that's because we've still got a tight labour market. We've got a central bank, which, you know, in the States, which is raising interest rates. The pound got obliterated off the back of the budget, off the mini budget, because it doesn't like, the market does not like the way that the Conservative Party are going towards this low tax environment. And effectively, they are doing exactly the opposite of what the condition is. You know, the time you lower taxes traditionally or historically is when the economy is relatively buoyant. So you can kind of give the give participants a bit of room, but they're not doing that. They're doing exactly the opposite, and it does look like break the economy economics to me, and evidently to many other people, which is why we've seen the pound absolutely tank, and we've seen it tank specifically against the dollar, but also look at it against the euro. You know, if we look at this on the monthly, we're pretty much back to, we certainly tested back to all these highs up here. Not looking good for the pound, you know, and the way that the central bank in the UK has been so much more dovish, raising interest rates only by 0.5%, where everybody else seems to be going at this 75 basis point move. This is completely understandable. You know, the move in the pound is completely understandable. Not only do you have a dovish central bank, but then you also have an aggressive, if you like, government who just want to loosen policy even further. So it's the perfect storm for further weakness in the pound. Whether you believe that the move is done or not is another question. And I would certainly say that it probably isn't. That may help the FTSE, but if we come back to other instruments that provide us with an idea of growth, look at what's going on with WTI. You know, look at what's going on with oil. Oil's in all sorts of trouble. So with oil in the trouble that it is, it doesn't suggest that we've got a reversal in the FTSE. And, you know, that level might well be there. So we might have a little bit lower before we start to see the rally. That's not really supportive. Brent is a little bit different, because Brent does look like it may well be at a potential level of support here. But it could be, there could still be further to go with Brent as well. And it does seem like it's through some levels here as well. So, you know, oil market looks weak, and that's probably because of the dollar. The pound looks weak because of the dollar, and also because of UK policy. And what else do we have? Silver. I was watching, you know, quite a lot. A potential inverted head and shoulders down here, left shoulder. There's the neckline. Looks like a bottom head. So this may well turn around. Now you can see along here the. You
been out to buy your physical stuff yet, mate?
No, but I'm interested in silver. I'm really interested in trading silver. I think silver could be a decent move. You know, if this thing does turn around. I agree with you about the dollar. It's got to turn at some point. Again, the fundamentals aren't matching that right now. Jerome Powell needs to say something in the next few days, which suggests that there could be a pivot. The 2-year yield is currently at 3.9. And the dollar is priced, the interest rate is priced at 3.25. So it suggests another 75% basis point, 75 basis point move. After that, then I wonder whether we might start to see some easing, but that's a whole month away. So it's possible that the pricing in could happen of the 75 basis point move, and then we start to see the dollar weaken a little bit. But at this stage, you'd have to say we've got to see something a bit more substantial before we start shorting the dollar and going long on these assets. But what, I was chatting to a friend of mine recently, and he was asking me, what can I invest in? I've just got some money. What can I invest in? And I said to him, look, put your money in the bank right now because there's nothing clear and you've got to wait. But when it does change, you will have every single opportunity available to you to make life easy. Right now, you are literally looking for a needle in a haystack. So it's not worth it. It's not worth going long on any asset at this particular stage. You want the situation and scenario that we had 2 years ago when it just didn't matter what you bought. Everything went up, crypto markets, everything went up and you could make great money. The stock market, everything went up and you could make money. We're not in that environment. And for somebody that's not watching the charts constantly, this is not the time to invest. This is the time that you just sit on your hands, put your cash in the bank and wait. And if you do that, you will reap the rewards of that, because this thing will turn, and when it turns, it's going a long way in the opposite direction. And if you look at the DXY, which is the dollar index, then what we know is these areas do not remain untested. This area will not remain untested. I think we can say that with relative confidence. You can never say never, so take the language with a pinch of salt. But the 103 has got to be seen again, in my opinion. So we're at 112 right now. So we're looking at a 10% move in the opposite direction of the dollar. Now that is going to drive everything else in the opposite direction. And if anything else goes 10%, you're going to make good money, even if you're in 2% later. So watch out for the turn, because it's coming. But in my opinion, mate, we just got to be patient. This is where the professional aspect comes in. We can see that it's toppy, but it doesn't matter. What we've got right now is the comfort that the market is overstretched and there will be a move, and there'll be a good move. But what we don't have is the comfort of the technical picture quite lining up and the fundamental picture lining up. COT data, as I said yesterday, is short on the dollar, quite significantly short, and it's telling us that the bigger guns have changed
for
their
obvious reasons. They can't buy it at this level. So
mate, and they're effectively telling us the risk is to the downside. When the COT data shows us that the risk is to the downside, the dollar tends to rally up until October. So we've only got a week to wait. And then next week, maybe that's the time that we start looking at this and saying, let's start thinking about assets. This week, let's get a collection of stuff that we're interested in. Is it Bitcoin? Could be. Is it silver? Is it gold? Is it the Nasdaq? Could be. Let's just quickly check the Nasdaq. Is it oil? Because everything is going to go in the opposite direction with things priced in the dollar. Look at the Nasdaq, head and shoulders pattern, quite slim, but we are at a neckline. We're pretty much right on top of this neckline now. So is there to be a bounce in the Nasdaq? To be fair, there should be. Will there be? We don't know. The Nasdaq still has got some room to come down. So this level here, it's at 9,000. But there should be a bounce here. However shallow, there should be a bounce here. But that bounce may be really good if we wait a week. It might be that it comes down to this level this week, and then we start to get the move back to the upside. I mean, that'll be a 15-20% move lower, so that'll be pretty bad, but could happen.
Look. So you look at all those charts, all the indices charts, and really what you need to see, in my humble opinion, is the fact that we're getting lower lows and lower highs. And right now, the Nasdaq is at that point where it's going to either A, give you that lower low, or it's not, in which case this market could well turn around. So that line that you've got in your chart is very much critical, and I think that's where we find ourselves at the moment on most of these. S&P is the same. I think the Aussie 200 is the same, and George will have more to say on that because he's obviously across them far more than I am. Gold is through, however.
Gold is through, mate. It looks ugly, doesn't it? Gold. I wouldn't touch gold. And again, COT data does not suggest touching gold either. Nasdaq, look at Squeeze line. I'm going to call it Squeeze line, and it's a 200, but I'm going to call it Squeeze line. Look at Squeeze lines. You just put in that to everyone. I'm looking for a Nasdaq bounce in the 200 EMA on the weekly. This is the S&P on the weekly. bounce, bounce, bounce. I don't know how far this thing goes back, but I think she has just found an absolute peach of a level. Look at this. This is great. You've got to be romanced by this, mate. We got one. Let's count this one as well. 1, 2, 3, 4, 5, 6, 7. Is it going to be the 8th incidence in the last? I don't know how long this went back. The last 6 years where the 200 EMA holds up. This is the Nasdaq.
Yeah, could well be. But look at the last time it hit it. You want to have a long, big stop loss the last time it hit it. Sorry, the last time prior to one.
This is a great,
and that's the challenge that we've got.
This is a fantastic level, man. I mean, look at it. It's amazing.
Absolutely. And that's exactly what we've just been talking about at the end of the day. Everything's overstretched. And the 200 EMA comes into play when everything's overstretched, right?
Yeah. Yeah.
Because that's what it's all about.
Yeah. Loving it, mate. Well, I mean, you know, the kind of takeaway for me is I'm ready for the long, but that sounds ridiculous, but I'm not ready for the long until the fundamentals turn around. And the fundamentals could literally be, all we're waiting for is some hint that the Fed are happy at the level they're at. That's all we're waiting for. As soon as they're happy that the level we're at, the market's turning. Whether it turns significantly, can't say, but the market is going to turn as soon as Jerome Powell comes out and says, you know what, we're probably okay here. Now that could be that could transpire in a few ways. It could be a speech, which we've got in today. I think he's speaking, or maybe Wednesday, definitely. But
it's a speechathon this week. Yeah,
speechathon this week. So he could say that. We could get CPI and core inflation data dipping significantly, but if it dips, let's say it dips 1%, that's going to cause a rally. We could see the labour market start to loosen. So we start to see unemployment data go from 3.6% to 4%, 5%, something like that. That's going to cause a rally. You know, there's a few things that we can look out for. Now, with the labour market so tight and conditions the way they are, that labour market's going to turn. You know, there's no way that people are going to continue to hire into recessionary territory. So we know that this stuff is going to happen. Whether the CPI data is going to turn is difficult to know. They're putting it down to supply chain. Sounds like supply chain's picking up. The demand chain will loosen as well. So that should turn. You know, there's a few things there that you would sort of say, you know what, the environment actually is probably primed to go in the opposite direction, but we haven't had it yet.
You can probably throw COVID in there as well. That seems to be relaxing around the world also.
Yeah.
So yes, we are at the point where I think we'll see. I'm not going to say it turn. I'm going to say the potential for it to turn to increase. I'll put it that way.
Yeah, like that, mate. Much better language than I've used. You should write my speeches.
Too easy. Just got to. We're way over time to go to George. Sorry, George. There's just so much to talk about, mate.
I'm perfectly fine, gents. Not in any trades, so carry on talking. I'm hanging around. I'm not in a rush.
Cool.
Yeah, you called the short, George.
George, are you free?
George is in, mate.
Oh, there he is.
Oh, sorry, you can't hear me?
We can hear you fine, mate. Jeff can't. He needs to get his trumpet out, but we can. The rest of us can hear you, no problem.
No, I was just saying, perfectly patient, not in any rush. So, and I'm not in any trades at the moment, although I'm watching the market quite closely. Just gold. Let's look at gold very quickly. I mean, if you ever look where we are, we had this. I still think the bear is trying to create this bear channel and trying to continue with it. So this failed breakout, what's looking like a failed breakout now, don't know where the day is going to end. It's just a continuation of what's taking place here. Now, this thick blue line is low of 2021 key level. So when we had this break below it on the 15th of September, what would have made me at that point think that, the bears have taken over completely was the following day, fact that we had a bull candle failed breakout, then we just went sideways. In this sideways, in this trading range that we've got, the bears, I think, are in control because the bulls want to stop the breakout. They can see, obviously, the channel that we're in. We want to get above this low and hopefully get above the channel, then break the momentum of the bears. So even if we get a pullback here for today and we have more buying tomorrow, that's the level that I think the bears are going to defend. Now, as far as I'm concerned on the, if you want to move to the 5 minute, I can still talk about before I go to the 5 minute, here's where we could possibly go. So we had this bear move here. That's the first leg of the move. In fact, let me break it up a bit. When we had this bear breakout here from this high, that was the first leg. So that was my leg one. The pullback got to here, and then the extension would have gotten us here. And we got to the extension. So in August, we had the first leg, pullback, second leg. Then with the move that we've had now, this whole August move is just a two-legged or a leg one with two parts. Think of it that way, a bit of complexity in it. So these two parts form a big leg one. The pullback ended here. The suggestion is that we'll get down to here, which is where we almost are with today's candle. So whether we get back to test a bit more or that's the test, not a surprise. So I won't be surprised if the bulls come back into the market. Doesn't mean they're in control of the market because this channel is a problem. This level of resistance is a problem.
George,
However,
if I could just add to your analysis, I've been screaming this for months and months and months and been laughed at and laughed at and laughed at. If you go to the weekly chart, you've got a massive double top sitting there, right? And the line you are suggesting is the key level, is indeed the neckline of that double top. So if you were to put a measured move onto that, that'll tell you where I think gold is potentially going.
And we already have that marked. Isn't that interesting? That's measure move. So I picked that off on the daily. That's exactly where we're likely to go. 1276, that range. Yeah, that's what this is suggesting. And in fact, look at that. Last week's candle confirms the bear of the strength of the bears. All we want, even if it's a small little candle here for this week, we're gonna go there. Definitely gonna go there.
I'm with you, my friend.
There will be some pullbacks along the way. These measured moves, there'll be pullback right there. There'll be some pullbacks as we try and bounce off that. But that's what the price action is suggesting. All the bears need is just one extra candle to confirm the breakout.
What price is that, George?
We're here.
Yeah.
We're gonna go to 1276. 1276.
Me. Wow.
Yeah. That's what this is suggesting.
This will be a George and Jeff party if that
happens.
Are you sure? Yeah.
And we're gonna start, celebrating from right here. As she goes down slowly, we'll be there.
Look, fundamentally, you just cannot envisage that happening. But the markets and the charts over many, 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 many years beyond our lifetime, well, not quite maybe, have been refuting fundamentals for so long. You just can't argue. I can't argue. The charts,
but they won't bring it out the ground, will they? I mean, anything below that level, they're just not going to bring it out the ground. So regardless of anything, there's just going to be a glut of there's just going to be such a huge stop of supply that if a rally doesn't happen there, then what are they doing? Just going to completely drain all the gold resources?
Well, what if I can actually imagine a fundamental scenario where this will be the case? Digital currency can be that makes the standard of the world becomes digital instead of what you've got in your hand, right? Cash,
Yeah.
cash is meaningless. Everything else is meaningless. It's only digital currency.
Yeah.
So I'm not suggesting that's going to happen, right?
Yeah.
But
Yeah.
it will happen in some form. I've got no doubt
Yeah.
about that. Absolutely no doubt about that. What that does is change the whole ball game. It really just changed the whole ball game. What it looks like, not 100% sure.
Any opinions on silver, George? Because silver's a completely different beast, isn't it? I mean, it's a precious metal, but it is also an industrial metal.
Well, I've been saying for months, just go and buy physical silver.
You're liking that, aren't you?
Absolutely.
Yeah, I like silver. I mean, I'm waiting to get into something with silver, if I can, but not there yet.
Just go to the mint, mate.
Go to the mid.
Mint, M-I-N-T.
Oh, the mint. Yeah.
Buy it off the
Well,
mint.
I'd quite like some kickback. Yeah. No, you're absolutely right. Well, that would be a way to do it, wouldn't it? I can't, but that's oh, just for everybody else as well that hasn't seen, Swee's also put on the 50 EMA on the monthly, which I've just had a look, and it's a great line as well. I mean, particularly on gold, it's a really good level. And we're just below that level as well, the 50 EMA on the monthly on gold, which may provide some resistance. And just so you know, Sweet, I've got those on my chart. I've saved them. I really like them.
He's labelled it Swee's chart.
I have actually.
There you go. Great to have Swee in.
Undoubtedly, mate. This is silver, is it?
Yeah. Well, I've put the weekly on. We are, let's just put a rectangle here in this trading range that we're in. That. And the bears, of course, have tried to break out beneath that. There's that level there that is a magnet in the market. What low is that? It's March 2020. Break below this trading range. The goal is there to get to March 2020 level. And
what level is that, George?
This is 11. What is it? 11.6.
Wow.
That's where the market wants to go. Now, how it's likely to go there. It just depends if this is a channel that's the bears can be able to hold.
I hope you're right.
So, they could just channel down like that, or it might just be, like we saw on gold. If you get one big candle breaking out beneath this, then this support becomes resistance, test it, and just go all the way down. So the suggestion, and from what the market is saying, what we're seeing here is that we will keep on going down like that. Stay in this channel. And already have a double bottom here, and little double bottom, so we just bounce off it unless by something dramatic happens, we break out beneath it to test this level. But the bulls need, of course, and they have a problem. They now have this huge problem here with this trading range.
Yeah.
So if they break out above this, they still have to fight off the resistance here, which will come in to bounce off that and keep coming down. They really have to be strong, like here, a few candles, 1, 2, 3, to get back to the top of the range and hopefully break out above it. I don't know if that will happen this year. What's more likely is continued selling to get to this. I mean, this is a strong magnet in the market that's going to pull the market down. That measured move, which is close to that low, that's going to pull the market down. Maybe then they want to create a double bottom, and from there we have this huge trading range on that high, that low, which might take them up there. But the bears are just saying, listen, if we can get down here, whichever way we get down here, and then if we can break beneath this. So if you put on your bearish mind, if you get down here and break out beneath this, I mean, then I can't even squeeze this enough on my chart. It's really gonna just go down.
Mm.
Oh my God, you're talking about the second coming, George.
it's gonna be as cataclysmic as the second coming.
Absolutely.
Yeah. I mean, you're right, and the thing is, it could come down here, you know, over the next couple of years, if what seems to be, you know, happening continues. You know, if they do genuinely kind of choke world economies, and we do just get this kind of this situation where growth is just impossible to find, then all this stuff is coming down while the dollar is going to continue to strengthen. So, you know, we're looking for a dollar turn, but it could still last a few months, couldn't it? You know, if not a few months and well into 2023.
I mean, if you look at it, just, I mean, the fact that we have this channel created, if we just had one bear candle and then a bull candle coming up, would say, listen, it's easy to get back into the range and carry on like that. But the fact that already a channel has been formed, I mean, it takes a lot of for the bears to create this channel. So this is going to carry on for quite a bit. And I mean, I don't see a sudden reverse. I mean, anything can happen. You know, someone may declare something, or the second coming may come. I don't know if we still look at charts after that, but something dramatic may happen to break out beneath here or low. But this channel is going to carry on. That channel,
amazing stuff.
Higher probability.
Yeah, look, the previous market structure, which is your rectangle, George, has now been broken and proven that the bulls are no longer in charge, as you say. So the next market structure is exactly as you pointed out there. It makes perfect sense to me. Perfect sense.
Yeah. So if you're looking to sell, you know, then you just got to worry about where to put your stop. You know, that's technical level. I think about there. That's where I put my stop. And then as it goes down, just keep moving down to the lower highs and see how far you can take it.
Anything that you're looking to trade right now, George, or are you just kind of waiting for?
Well, I'm actually looking to go to, looking for shorts on the UK 100, and as we're talking, things are happening, which is fine. So we can look for pullbacks. So just on the daily, here's the interesting thing. I mean, the levels that we are at. I mean, the bulls are out rampaging in the market. This is where they've been buying. You know, whichever way you look at it, in this level, bulls buying, higher low double bottom, bulls buying. So here, you know, I'd expect there to be a lot more fighting by the bulls. So, but with that in mind now, when I look at the structure that I'm looking to trade presently, I'm looking at just what's happening this month of September. So we had this huge sell-off end of August. We came back and we tested the beginning of it, and the bears reasserted themselves. So this little trading range here, this low beginning of month, this high here, that breakout for me is telling. You know, that's a strong breakout beneath that level. If the breakout is successful, that's the goal. That's the measured move. That's where the market wants to go. Now, when will it be successful? It's to be successful on a follow-through candle. This today, if the bears are going to be successful, that's going to be the follow-through candle. And why would that be important? Number one, it confirms the breakout. But number two, if we just close beneath the low of the previous day, last week, we've closed beneath all of these lows. So they've reversed the bullish pressure here just by closing beneath today. Then, you know, getting down here won't be a problem. So my higher probability trade search for today is to see if we get that confirmed breakout. So if I drop down just to the 5 minute. By the way, you see all these candles marked in yellow. Yesterday, I did my first It's not actually the first. I've done many before in the past, but since COVID, I did a full day course on trading the open. Quite a lot of guys from the offshore turned up. So talking about trading the open, these candles, open of the day, open of the European, open of the UK markets, are the candles that I use primarily when I'm trading the open. So I'm just marking them anyway because I save all my charts. When I do my next course, they're all there instead of searching for them. So that's why those are marked. Now, one of the patterns that I look for at the open, for example, previous resistance levels were this high. This is high in the Asian session, and as strong as the bulls were here, even on the open of European markets, all we've done is test that previous high, and we've kind of failed, right? The bulls have failed to break out above that. Unique opportunity just to break above that, break above the 50% midpoint of that huge candle of Friday, and they have failed to do that. So where we are now, I'm seeing bear strength. What I would need to see is one of two things. Either, so that actually would have been a trade I should have taken if I'd been more alert, but I was enjoying the conversation. Reason is, you have a failed breakout, one, you have a second breakout. So failed breakout number one, then you have a second entry. So that would have been a trade to take with a measured move stop. So the guys who were in the show yesterday, if they're watching this, that would probably make sense. We have many examples of this. But anyway, we don't worry about it because there's tons of other opportunities coming through. If the bears are strong, I mean, look at this. This big magnet is right here. All they need to do today, if they break beneath here, whatever happens, if we just keep a close beneath here, then we're going to have more selling. So presently, I'm going to see if we get any pullback of any sorts to create a lower high, then I'm going to jump in. At that stage, I don't have to put a measured move stop up here. So, if I'm taking that first trade at any open, you have a measured move stop up here. But if you get the pullback, then there is a stop at this double top. If we don't get that pullback, fantastic. If you get a breakout beneath this low here, which is a key support, remember on the daily, I'll put it up quickly because it's absolutely important. This high low double bottom here. Okay, that's the level that is here on the 5-minute. We'll look at it again. That's this level here. This level is absolutely critical. If the bulls are strong, this buying that we saw will reassert itself again here. And yeah, it's confirming this opening candle. It's confirming this candle of the Europeans, confirming the opening candle of the day. But more importantly, the longer term high low double bottom June, July will come into play. Then we can expect more bullish price action. So presently, if you had taken that trade, you can take your profits here. I mean, that's a key level. You can just take a profit there if you wanted. If you haven't done that, if I was in like I do, I like to just watch things and manage and just see if we get that probability, lower probability trade to break beneath here. But if you don't get that, bulls come back into play, then we just want to see strength of the bulls coming off here and hopefully creating a higher low. And then you can take that trade and see what happens during the day. If we get back to these levels and we get by that time to be a wedge, right? Because we've got a double top already. First push one, second push, we get a third push and a lower high, then we sell again. So it might just be a bit of trading range price action until we get a breakout down here. So I'm actively watching this market. I'm looking forward.
That's interesting. Yeah, that's not dissimilar to what we're trading on the London Open with the pound versus the dollar. Not the same, but it's not dissimilar. We might have to compare notes on that, George, at some stage. You going to Bali?
I'm on to Bali, mate. I'm definitely going to be in Bali.
Yeah, I'm not going, so we won't catch up there, unfortunately. Never mind. We'll catch up shortly somewhere.
I'm sure we will.
In the world. Mate, thank you so much. Really appreciate it. What's happening on Wednesday?
This Wednesday is just the 45-minute show, live trading profits, which we've moved an hour later. So it starts at 6:30 p.m. Singapore time, 10:30 GMT. So hopefully we can catch some guys after work.
Actually,
That is 45 minutes.
you guys don't do daylight saving, do you? Or do you?
No, we don't. We just stay fixed. So
What a wonderful world that is.
Remember to tell me, because I'll get confused. I don't know. I always miss something or get somewhere early or too late.
Yeah, I haven't looked that up yet, but I know the Aussies move next week, so I'll be later. Don't let that confuse anyone else. That's just Aussie. When do you guys go, Ash?
Oh, I've got a feeling it's Halloween kind of period, but I can't remember.
It's normally a few weeks.
Yeah, I'll double check it. There we go. Daylight saving, so November the 6th. So just slightly after Halloween, week after Halloween.
Okay, I'll just be getting used to the new time, and then we'll stuff it up again.
Oh, so I hate it. I envy you, George, staying where you are. It's just I don't know. I was going to say it doesn't make any sense to me, but that's because I haven't looked into it. But I know it's a historical reason or whatever, but I don't know whether it's still worth doing or not. But I just don't like it because it makes the evenings really dark and the mornings really dark, and it's yeah.
Same.
Dank.
All right, so you can join George on Wednesday at 6:30 Singapore time, and
yes.
I'd recommend that you do so. And George, thanks, mate. We'll see you next week.
All right, for sure. Thank you, gents, for having me on the show.
Thank you, George. Brilliant analysis, mate.
Okay, bye-bye. Take care.
Okay, so speaking of the pound, nothing's happening, but I have to point out, really, that this is a massive range that we're trading, and I'm not sure, but we've got to try it because we're testing it, right? I'm not sure that it's the right thing to do, to be honest, because it is such a massive range. I don't know that we're going to move outside of that range anytime soon, to be fair, but stranger things have happened, that's for sure. Don't forget, we've only got a short in here, not a long, and we've got to go, how many pips? 600 odd from where we are now to get our profit. So it's a big ask. Anyway, we'll continue to monitor that. Now, in terms of cancelling these orders on the pound, end of day, guys, end of day. If nothing's happened at the end of day, cancel the order. That has been asked of me. I think I've been through, the only thing I haven't done, Ash, is the euro. And as always, we're looking for a daily pivot test. We're pretty close to the daily pivot at the moment. Not my favorite place to be. So I'd much prefer price to be down here somewhere. If it tests, then happy days. We haven't got a trade. But in terms of direction, we've spoken about this at length. This is, an inverted version of the US dollar or the dollar index. And it's just so hard, really so hard to get it into your head that this can go long, but it will. There's no, as sure as God made little green apples, it will go long at some stage. The question is when, how, and why. Technically, just impossible to trade, in my humble opinion. It's a waterfall that really doesn't have a bottom at this point. I cannot see a bottom. It just doesn't exist until we get down to somewhere like, oh, well, okay, maybe it does exist. Maybe it's there, which is like 94, another 300. Was actually, no, now it's only another 250 pips away. So maybe that's it. And we've spoken about this. The dollar's got blue sky above it if it closes above that 113 level, this level here. If it closes above there on the monthly chart, there's nothing to stop it, absolutely nothing to stop it going to 119. And the reverse of that, of course, and not only the euro, but specifically the euro. If I can find the dash thing, where is it? There it is. probably coincides with that level there, right? And maybe even a little bit deeper. But it's like that adverb, I think, is it Pantene or something like that? Hair lotion. It won't happen overnight, but it will happen. There's nothing sure that, as I said, God made little green apples. It will happen. But trying to pick that time is not something that you will profit from often. You might get it, you might get it right if you guess, but really that's all you're doing at the moment is guess. And I would suggest that you wait for a reason to actually say, okay, now I'm going to buy euro versus the dollar, than just guessing and saying, all right, it's at a support level, let's go. Because invariably you'll get burnt doing that. And I don't suggest it's a good idea.
The other thing, mate, that we haven't really sort of talked about is what was churned out of the data this week was Swissy short. Actually, it was the Swissy short mainly. And the kind of better currencies, even though they weren't really strong, but the better currencies was the Aussie, the dollar, and the CAD. And if you look at sort of like the Swissy versus the Aussie as an example, because of the area, it's quite an interesting currency. Now, the thing with the data is it might still take a little while to kind of churn out, but the you know, the Swissy and the euro do have some kind of relationship, but the Swissy, you know, we have seen that kind of rally. So that also suggests that there might be just a little bit of risk on, possibly coming back into play. Don't know if you had any kind of thoughts on the Aussie specifically, really, but yeah, Swiss Aussie I quite liked.
Well, I'm kind of on the seesaw with the Aussie. It depends on what you're trading it against. In my humble opinion, completely steering clear of the dollar, completely steering clear of that. I think the yen is a really interesting point right now, as we now know, the BOJ intervened on Friday, and that it's a sad story, mate. I was short pound yen, I was short Kiwi yen, and I moved my stops to entry. Oh my God, how much that cost me! I just can't even count it. But anyway, It is what it is. We won. We had a good week, but it could have been a massive week. Anyway, it is what it is. But as I said from the start, the question now is that sustainable, or is that just a blip or a pea in the ocean, as I say? I don't know the answer to that question, but if we are going risk on, then that will reverse. And Aussie yen, in particular, will probably bounce off this level and go long. As far as the Aussie is concerned, from a strength or market sentiment point of view is concerned, it's dependent really on what happens with the bigger picture on commodities. And you know, I don't think they've had a good day on Friday. So I think we're at a point where I can't answer the question until we get either a follow through of the commodity sell-off or a bounce. And similar, answering that question of the yen, it's really at that point where I don't know until I get either the follow through of the yen, which I actually doubt will happen, because of history tells me that every time the BOJ intervenes, it only lasts for a very short period of time. And therefore, I think we will go risk on. And if that's the case, the Aussie rallies.
Yeah.
But the commodity prices have to go before it, I guess, for that to happen.
Yeah.
And as I say, against the dollar, it's impossible for me to say Aussie's going along against the dollar. I can't say that. Yes, it'll happen, but when, I've got absolutely no idea. So I'm a little bit dependent on what happens with the yen and what happens with commodities. And I think if both those things work in the Aussie favour, then you're going to see a strong Aussie. Absolutely, you're going to see a strong Aussie. I've got no doubt about it. But those, one or both of those things have to happen first.
Yeah. Well, the messaging really is patience, isn't it, mate? So let's wrap it up and come back Thursday, see what happened. We've got nothing really to do. We've got Lagarde out at 2:00. So she may well have some kind of bearing on the market. And aside from that, that's pretty much it. Mester today. So it is on Tuesday. Actually, we got Powell. So tomorrow, you know, we might get something in the market, but certainly looks like today we are pretty much resigned to the fact that we are not going to get too much more.
Yeah, look, 100%. I'm on the sidelines. That Euro Aussie trade that I entered this morning, as I said, just shocked me when I came back to the charts. Didn't even expect to be triggered, much less triggered and down most of the position. But we'll see how that progresses. 1, 2, 3. That's suggesting that this is going short, I've got to say. So that yen follow through that I spoke about, I'd love to be able to trade that, but I need to have a bullish bar there today, as I said before, to trade that short tomorrow. Can't trade it short from there. Doesn't make sense to me because there's no reward available for the risk. So we'll wait and see what happens. That's absolutely primarily the one that I'm now looking at. See how it goes.
Okay.
All right, mate. Have a great week.
Yeah, you too, buddy, and everybody else in the room. Have a great week. Thanks, Sweet, for your extra levels on my chart. Really appreciate that. Thanks to everybody else that was in the room, and to Marlon, of course, for looking after us. See you in a few days.
You bet. Happy days. Have a great week, guys. Thanks for being our trading buddies. Bye-bye.